It's about that time of day again. My name is Joseph. Wednesday evening, March the 7th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is bearish after this morning's news report sent prices running lower. And this strong collapse lower tells me there's a hidden channel somewhere on that chart, and I'm going to use that hidden channel for selling opportunities tomorrow morning. The S&P is bullish on its way back to yesterday's high. They survived that gap overnight, and I'm watching price action closely and how it's reacting to the midline of a major channel because there's clues for important buying opportunities tomorrow morning. Nasdaq is also bullish, but a major resistance level tells me this isn't a great place to start buying. So my plan is to wait for more reliable buying opportunities after a pullback into the battle zone tomorrow morning. The gold is bearish, the big spike in channel pattern, this meltdown today on the yellow metal. That tells me to look for selling opportunities using the 2-try rule up above the range tomorrow morning. The euro is bullish, but trading sideways at the high, same range from yesterday. And that tells me I'm going to continue to focus on failures down below the low of that range, and we still have that key reversal line we're watching on the euro. Boy, I got a great newsletter in store for you guys and gals tonight. We have a ton of reliable trading opportunities setting up on our favorite futures markets for tomorrow. Before we jump in, though, and put the plan together for Thursday's session, I do want to remind you, if you're watching me on YouTube this evening, you can find a detailed description of this strategy on my blog at sidewaysmarkets.com. I'll be sure to put the link in the description of this video. Also, if you have any questions about anything covered in this video tonight, please remember to post them in the comments section below. And if you really like what you see, please help support this channel by subscribing to my channel here on YouTube and make sure you hit the bell icon so you get notified every time I post a new video. And if you want to stay in tune with everything that is School of Trade, head over to the blog at sidewaysmarkets.com. This is where all the action happens every day. I'll put all the links in the description of that YouTube video. Head over here to the blog at Sideways Markets, and while you're here, don't forget, join the mailing list. I'll send you an email whenever I post something new here at School of Trade. Follow me on social, StockTwits, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice. I'm always posting exclusive content. You won't find it anywhere else on my channel. Make sure you follow me on social in the lower left-hand corner. And speaking of charts, how easy is this? All the charts that I work all day to produce on this video tonight, you can have them on your computer for tomorrow. Follow that link that says click here to download today's charts. Grab those charts and be ready for tomorrow's session. And speaking of tomorrow's session, I've got one more day left this week of the double free pass. Don't miss this opportunity. Grab that free pass in the upper right-hand corner. Come out and join me as a guest in the trade room and see what we're all about here at SOT. And don't forget, any questions, post them in the comment section below the video. Post them in the comment section right on our blog, or shoot me an email right at jj@schooloftrade.com. Let's jump right in here. Enough of that chit-chat. Let's grab a look at our charts. Let's grab a look at our calendar here for tomorrow. Tomorrow's Thursday, March the 8th. Got a lot to talk about here tonight. Let's dig in. First of all, tomorrow morning, Thursday morning, the kind of scheduled news here tomorrow, all we really have is that jobless claims tomorrow morning. And honestly, I don't expect that to be a big market moving event tomorrow. So really, there's no real big obvious scheduled news events right for tomorrow. Obviously, we'll keep our eyes and ears open for any unscheduled political announcements, natural disasters, acts of terrorism. You know the routine, right? All those unexpected things that kind of creep into the day. We'll be keeping our eye open for that tomorrow. Also important to understand too, tomorrow morning, just before the open at 8 o'clock, we're going to hear from Mario Draghi from the ECB. ECB meeting announcement will be at 7:45. So be aware if you're trading gold or the euro tomorrow, you got Draghi in the microphone as of 7:30 tomorrow morning, or should I say 7:45 tomorrow morning, and that usually causes gold and euro to be quite a stir. So watch that for tomorrow morning. Also, too, as I've been mentioning all week this week, tomorrow is rollover day on the E-minis. Now, as I'm recording this right now, rollover isn't even close on a market like the S&P. You'll notice here, right, the 318 contract still has dramatically more volume. So as I'm recording here on Wednesday evening, it doesn't look like we're going to get rollover tomorrow, but basically my strategy always is whatever has the most volume, that's what I'll be trading tomorrow. So tomorrow, keep an eye on, again, it's all the E-minis. and you're comparing the 0318 contract to the 0618 contract, take a look tomorrow morning at the total volume. It'll usually be quite obvious when we're doing rollover. This has nothing to do with contract expiration, right? I'm not talking about the expiration of the contract. I'm talking about the simple fact that when there's more volume on the 618 contract than there is in the 318 contract, we will begin trading the 618 contract. The book says it's scheduled for tomorrow, right? Well, maybe not a book, but the exchange says it's scheduled for tomorrow, right? But we'll see. We'll see if the volume actually rolls over tomorrow morning. So watch that rollover on the E-minis. And what else? What else? I had one more thing. Oh, that's right. Look at it Friday. Friday morning is the non-farm Friday, right? We get the pretty much the biggest news we get as traders is on Friday morning. It's every first Friday of the month, except for some reason last Friday didn't count, I guess, whatever. So tomorrow it's scheduled for 8:30 Eastern time. I'm not going to worry about why they pushed it back a week. But we do know tomorrow morning, 8:30 a.m. Eastern time is our employment number tomorrow morning. What does that, oh, sorry, not tomorrow morning, but Friday morning. What does that mean for us tomorrow? It means tomorrow afternoon, be on your best behavior, because you're probably going to see the market slow down. At the very least, you're going to see lower volume tomorrow afternoon because professional traders have learned their lessons trying to trade ahead of non-farms, and really big lot traders can't put any open positions on before that news on Friday morning because the volatility is just so insane, right? So be careful tomorrow afternoon. If you plan on trading tomorrow afternoon, be very, very careful watching out for that lower volume. And oftentimes lower volume increases volatility, so it can be misleading on that. So be very careful tomorrow afternoon. So no major news tomorrow morning except for the ECB announcement at, what time is it? 7:45. That'll probably be affecting gold and euro until about 9 o'clock, 9:30, as Draghi gets out the gloves, right, and battles the reporters and all the live Q&A. Rollover for tomorrow afternoon again, right, heads up ahead of that employment number, and we'll put the plan together for the employment number in tomorrow night's newsletter. All right. Deep breath. Let's keep going here. A lot to cover here for tomorrow's session. Let's jump right in. We got a lot here tonight. We got crude oil, S&P, Nasdaq, gold, and I'll toss in some euro at the end just because we love trading the euro. I've loved trading the euro, but lately it's been a little bit sluggish, as you probably have noticed. That's all right. It'll get back on track here soon. Starting off to tonight on the black gold, the Texas T, the crude oil futures. Crude's bearish after this morning's weekly inventory report, and this strong move lower tells me line up those lows, find that hidden channel, because that hidden channel will act as a beautiful area of resistance here for selling opportunities going back down to that low again tomorrow morning. Now, I'm also watching this rising resistance trend line, which tells me the cycle of a two-legged pullback into buyer failure, into strength, right, into a pullback might just be moments away. So if you're planning on trading in the Asian into the overnight London session, right, be aware. We got something setting up here on oil. All we need now is to see a show of proof. As you can see here on the chart tonight, pretty basic stuff. We spent most of the day today here on oil chopping around inside of what I would call a megaphone pattern, or an inverted triangle pattern. It was a good example there of a multi-directional trending day. Bulls headed up, bears headed down, bulls headed up, and of course bears now are the last ones standing here. Strong move down. Anytime we see a trend reversal like that, and you can pretty much just memorize this, I'm always going to look for that hidden channel. Hidden channels are drawn the opposite way of typical channels, right? Because all we really have are those two lows, right? Connect those two lows, bring it up to the highs, and looky where we are right now, right up at that high. With that channel, I want to sell the high of that channel, right, and go back down to retest that low at 60.58. At the same time here, you'll also notice I have a trend line that I've drawn up the underbelly of this move. You'll notice I don't try to draw the trend line in a wider capacity. When it comes to drawing support trend lines, the best of the best are going to be wick to body, right? Wick to body, right? That'll give you a better fit, and it will give you the option here now for that two-legged pullback that I always talk about, right? Two-legged pullback, trap high, failure into strength, and how does it finish up? Yep, strength into pullback and pullback back down to retest that low. Absolutely. Now that we have that, right, that trend line acting as resistance here, another area up here, right? We got that reversal line at 61.56. A prior level of support can be used as a level of resistance, right? So that creates the battle zone, right, coming off of that reversal line. And then if you look left up here, let's go out a little bit further. Yeah, right? So there's that trend line coming down, right, off that high, right, off that high. Now, I gotta be honest, there's also one more channel I'm watching here for tomorrow. You've seen this chart on a couple occasions here, right? This is a 30-minute chart of oil. And you'll notice here I'm connecting the lows on this chart, right, that low up to that high, right? And that looks like an area as well. Now, if you put a vertical line on here, crosshair puts us where? Yeah, right about 62. So $62 a barrel, you know, give or take a few ticks here and there. That's going to be an easy area to incorporate that. And you can see that puts us right up around, right, that battle zone as well. So this area overhead is a fantastic area to be looking for selling opportunities. And basically, I want to sell at resistance, whether it be selling at the reversal line or selling right off of this trend line. All I care about when the market's bearish, I want to sell off of resistance. So what if price goes up? What if price goes down? What if price goes sideways? Well, we are already set up here now for a move going higher. We'll get that beautiful trend line waiting here. We'll go up, right, tag the, hopefully get that trend line, get that battle zone, and then get that moving average to come over, two-legged pullback into failure, failure into strength, strength into pullback with a moving average, and pullback back down, right, to retest that low. Three easy patterns, right, sell, sell, sell. Obviously, the first one is the least reliable, but has the most amount of profit. The third one is the most reliable, right, with the least amount of profit. You'll always be balancing. You'll always have to trade profit for probability, right? The higher the probability, the less profit there'll be available. Okay, that's always a kind of a balancing act we have to play here as professional traders. With that said, what if price goes sideways? If price goes sideways, you know, let's just say, for example, right, next few hours, we kind of dance around here. I'll do the same thing here. Anytime we have a trading range, same plan as always, right? 2-try rule, 1 try, 2 try. If we do end up going sideways here tomorrow, right, in the short term at least, that is if we start going sideways, moving average goes flat, stay focused on selling high, right? You're not going to want to sell low because it can be so close to that low that won't be a very easy way to get in. Speaking of which, right, what if price goes lower? If price goes lower, we have to be aware of our surroundings. And we're going to talk about this a bit more on the Nasdaq and the S&P. If price goes lower here, we got to think, where is the objective? The objective is to get back down to that 60.58. So if price goes lower, I've got to find a way to get in somewhere up around here, right? I got to find a way to get in a little bit higher here. But now, here's a little trick that I teach all my clients. Always think about where the opposite side of the market would be participating, right? Put yourself in the shoes of the other side of the market. Just think, we want to be a seller, but if you were a buyer, where would you want to be buying at? Well, I'll tell you right now, if I was a buyer, yeah, I'd want to be buying right there, right? I'd be looking for a trap. I'd be trying to find those bears, trying to sell too low, and I'd look for that move going back higher. And we might see something like that for a move back up into that battle zone in the overnight session. So what you don't want to do is you don't want to try selling right there, right? Not a good spot to be a seller there. So what I need to do is I need to clear through this area and then use that area now as resistance. So that's the plan if price goes lower, right? So again, first thing is, who has control? The bears have control right now. The bulls don't have control. They're going to jump up, hold, pull back, take control, right? This is not a bull market. It's a bear market. Then you got to ask yourself, oh, that's not it. Then you got to ask yourself, where is their objective? And we're going to talk more about this on the S&P and the Nasdaq. Good examples there too. The objective is to get back down to that low. Okay, so the next question is, how do I, right, where would other traders be getting in? I'm a seller, so where would the buyers be getting in? Now, this takes a little bit of experience, right? But in a bull market, buyers always looking for trap lows, right? So that's where buyers we want to get in. So I know right now that my option is, right, to sell high, up, back down, But if I go low here, though, I got to be looking left. I got to be thinking, don't want to sell as the market's going lower. What I want to do is I want to get those sellers, right? I want to get those buyers in, right? Run them out, and then right when it comes back, bam, right? Sell it right back down in their face. Because what happens is the psychology is as the buyers try to buy this move, and it goes against them, what a lot of traders will do is they'll move their stops down to their point of entry. And once it comes back to that point of entry, what will happen is the buyers now will get out, right, trying to avoid that loss. They'll sell, sellers start selling, everybody starts selling. Does that make sense? Right? Anticipate where the opposite side of the market will be trying to get in, and then look for it to go through that area. That will rope in those buyers, right? And then, of course, they'll try to get out. Some folks take a stop. Some folks try to wait, go back to point of entry, right? A lot of folks will bring that target down, put that target right at their point of entry. So when they get back to their point of entry, bam, right? They become sellers. Now you've got buyers or sellers are sellers, everyone's a seller, and it usually collapses back down. So that's the plan if it goes lower, right? Now another thing to keep in mind would be tomorrow. If we come out tomorrow and we're doing this, we retest the low, but we're not making lower lows from there. Now call that a range. Now it becomes a bear bias range. Same thing, 1 try, 2 try, right? Back down in, sell off the highs. Okay, if we go through that low, through the low, get that moving average down, get the moving average below that low, and we can keep selling below that low tomorrow. So quite a few scenarios we can prepare for. They're all pretty easy. The most important thing right now is don't sell low, right? Don't sell low because that's what the objective is. Okay, how do we turn bullish? There is definitely potential for a bull run here because you probably heard the term before, big pops, big drops, right? Big drops, big pops. That's a big old drop, right? And it happened off news. So we might be able to see this thing come roaring back higher here. Don't be surprised if it does. We're in the wake of that big news event today. What would that look like? It would start off with a big strong move higher here. If we see a real strong move into that battle zone, this is probably turning bullish. Okay, probably turning bullish. What I'd like to do though is get that move up, hold, fail, right, and then back down, right? Sell that move back down, right? Don't even try to predict the top up here. Wait for the more reliable trade back below that moving average after you see the buyers have failed. Like I said before, right? That's the most reliable trade after it gets that move back below that moving average. So again, how do we turn bullish? Strength, pull back, strength. You got it. Strength, pull back to the moving average, strength. When that happens, find that new hidden channel, right? Buy that pullback, and we're on, right? We're on back to the highs. All right, and then obviously we got a big target waiting here for yesterday's high, up around that 63.20, right? That'd be a beautiful target if these buyers can get it done. Right now the bears have control, looking for a beautiful example of a two-legged pullback into a buyer failure, right? Keep your eyes open if you're watching this in the overnight Asian session. Over to the E-minis. The S&P is bullish with a wide bull channel as the bulls try to retest Tuesday's high. Two big clues in the chart tonight. First, we know the objective is yesterday's high. So the closer we get to that level, the closer we get to that level of resistance, right, the more concerned we need to be about buying too high. Second, the midline of this wide channel is acting as resistance. So I want to use either that resistance as support going higher or avoid that level of resistance and buy a pullback. Now here's a really good example. Anytime I see a wide channel, right? And let's see here. A wide channel will be anything described as seeing rotation above and rotation below. Okay, and you'll get to know these wider channels. But basically, when I have a really wide channel like this, right, put that midline in the middle. And that will confirm, you'll notice, right, you'll see the market bouncing off it, right? It'll use it as support, right, and resistance. If you put that midline on, you start seeing that thing bounce as support and resistance. Now you know you got a big clue here for tomorrow. Now don't overdo this, because a lot of times what happens is you get these really small channels, right, really narrow channels. Still a good channel, right, but it's just too tight. Okay, don't waste your time looking at a midline. When it's too tight like this, don't worry about a midline, right? Midlines are a waste of your time, right, inside that channel. Make sense? Okay, so you get a wide channel we're seeing right now, big old wide channel. You can see this rotation inside the top, right? Rotation down at the bottom. You know, people are trading inside kind of the upper half and the lower half of this channel. Okay, and you'll notice that every time I put that midline on, you'll notice, right, it's acting as resistance. Okay, so that gives me an idea of some additional support and resistance I can use tomorrow, either to avoid a loss or to secure a winner. Okay, that's one big clue, that channel. Obviously, here we get some measured moves, big strong leg up, pull back, there's the measured move. We have to assume that's the big carrot at the end of the stick for the buyers tomorrow, right? That'll likely be where the buyers want to go. But let's be honest, right? Anytime we have a strong move, if you recall this earlier this week, right? Here was that strong move up, right, to begin the week. Here was Tuesday, here was Wednesday, right? Strong move up, that's Tuesday's high. Anytime we have that strong move, what do we know? Two-legged pullback, retest the high. So right now we know the objective for those buyers is to retest 34.5. And that might be the most important lesson you learn for today's newsletter. And that is, you always want to know where the objective is. We know the bulls have control, right? We need a new pair of glasses if we think this is a bear market right now. It's not a bear market, it's a bull market. Okay, once we know the bulls have control, then we're going to ask ourselves, where is the objective? The objective is just overhead. What that basically tells me is that I can be a buyer here, but if we keep going higher, I can't be buying here anymore. Okay, I want to be buying on the way to the objective. I don't want to be buying when I get to the objective. Make sense? Okay, that's like going to LAX down the street here in Los Angeles, right, and buying a ticket to go to LAX. You're already there, right? You don't want to be buying once we get to the objective. Okay, bottom line. So as we look at this now, right, we know the objective, the wide channel, right? We have the measured move, and now let's put the plan together. Okay, got a nice strong move higher, nice little narrow channel, right? You wouldn't bother with a midline there. Okay, don't worry about a midline on that channel. Anytime we have a nice strong bull channel, what do we always expect? Yeah, two-legged pullback, retest the high. Anytime we see a strong move in one direction, what do we expect? Two-legged pullback and a retest. Yeah, it does. It happens over and over and over again. That's why I tell people, don't try to predict the strong move. Just wait for the strong move. Grab the pullback. It's so much easier that way, right? It's not white-knuckled. You can manage your risk better. I could go on and on and on about that. And I made those mistakes so often when I was a new trader. That's why I'm very passionate with sharing that knowledge with you on my YouTube channel. So strong move up, right? Two-legged pullback. Retest the high, right? What if price goes up? What if price goes down? What if price goes, right, sideways? I want to get price going higher, right? But I want to buy low because the objective is right there. I want to get price going higher, but I don't want to buy high because I get that midline right in the way. Right? I want to get price going higher. This strong move tells me, look to buy that low, right? Get that price down at that low. You get the rising support trend line, trap low, prior swing, right? Battle zone. Bingo. Okay, what if we go sideways here? Hey, pull back, retest the high, pull back off the high, right? We know we're going sideways when you see double tops at the high, right? Good example back here. Price goes up, pulls back, retest the high. There's a trading range. Okay, and then back here, right? Price goes up, pulls back, goes through the high. That's not a trading range, right? In fact, I use those two highs to create the channel low. You can see it fits perfectly. And this is a good example of a channel, right? That strong move up, all the buyers had at that time was these two highs to work with, right? We didn't know the rest of this yet. And that's a good example of how channels work. A lot of times when you see a big strong move higher like that, you get to think, the only thing we have to work with are those two highs. So bring it up, right? And you can see buyers are waiting down here. This is not rocket science, not some special formula. It's just putting yourself in real-time environment. Okay, what do I have to work with right now? Right? Two new highs, line them up, bring it down to that low. You know, right? You know those bears are going to confuse this for a selling opportunity, right? Two-legged pullback, failure into strength, strength to pullback to retest the high. We just talked about that, right? Over and over again. All right, so price pulls back, two-legged pullback, back to retest the high. Price goes sideways, right? Double top, price goes sideways. Anytime I have a sideways range, anytime we're going sideways in a bull market, look to buy low. One try, two try, or the fake out, breakout, pullback up to new highs, right? Two opportunities there with a range. One is a failure below the range. 2 is what I call a fake out, breakout, pullback to the highs. It requires that moving average to go above the highs, right? Requires that moving average to go above the highs. Okay, pretty simple there, right? Pretty simple there. All right, so now that we have that range, what if price keeps going higher? If price keeps going higher, now we get a midline, right? Now that midline becomes an important part of this. Okay, but the problem though is as price goes higher, we get that 34.5 area waiting right overhead. Okay, so we got to be careful here. If this thing just runs higher, now all of a sudden we're buying right into that level of resistance. So here's what I want to do. If we go higher, we keep going higher here, your job tomorrow is going to be to find those swings and grab that trap. Now, this is not drawn to scale, obviously. I don't know where this is going to be tomorrow. But if we go higher here and we don't pull back, okay, your job is wait for that trap, right? Wait for that opportunity to buy low, not buying high. Capiche? Right? Is that a deal? Okay, so bulls have control. The objective is at 34.5. We don't want to buy as the market goes higher. We want to buy as the market pulls back. Okay, I realize it goes against our intuition. It's counterintuitive, but we have to stop thinking like humans and start thinking like traders. Okay, one of the hardest parts to do as a new trader is start thinking like a trader. It's easy to push the button, buy high. We have to be disciplined, right, to buy as the market's pulling back. I know it's scary, but that's the way to do it. Okay, and then again, if price keeps going higher, look for that trap. All right, how do we turn directions? How do we turn directions? Strength, pullback, strength. Right? Get that moving average come over. Remember, if those bears can't hold it, right, it's going to look a lot like it did back here. Right? So think about that. Right? Pulls back, moving average, failure, bam. Same thing again. But if they can hold that pullback, if they can hold that sucker, then we'll go looking for that new hidden channel. Right? And usually that sell is going to be somewhere between that low and the high of that range, somewhere, right? Somewhere up in there. All right, guys? Good work there. All right, so gold bulls go. They're trying to retest that high at 34.5. Measured move for a good runner tomorrow, right? I would definitely leave a portion to run up to that measured move, but don't get too greedy because you know that measure right at the top of that range is staring you right in the face just overhead. How about some Nasdaq? How about some Nasdaq? Yeah, it's going to be a bit of a repeat. This obviously is pretty similar to the S&P tonight. Makes my job easier, but it's not always going to be the case. In fact, just recently the Nasdaq started acting like the S&P. It hasn't been the case for a while. So Nasdaq is bullish with a channel, with a big measured move, and it's trying to retest yesterday's high. This is an important clue because we're getting very close to the objective, which tells me this is too high to start buying right now. Knowing this information, my goal is now to find buying opportunities after a pullback off these highs with a target up at the measured move tomorrow morning. So as you can see right now, right, this again is going to sound like a little bit like a broken record from the S&P. We had that big, monstrous, right, huge move going higher, right, again on Monday's session, right? Tuesday's high, where we finally make the high. There's your two-legged pullback. Yeah, it's relatively dramatic, right? We had a bit of headline news overnight last night, which caused the market to pull back, right? A little dramatic. Again, that's why I never try to predict this low, right? Don't worry about trying to buy into this move going lower, right? Just wait patiently because you know what's going to happen, right? Two-legged pullback, back to the moving average. Bears tried, and then what? Failure, strength, pullback, right? And back up to retest the high, right? So now we know where the bull's trying to go. And I know I sound like a broken record, but it's the most profitable, money-making broken record you're ever going to listen to, right? You're going to wish this broken record played every day, all day for the rest of your life because hopefully that repetition of this broken record, right, hopefully that will rub off on you and you will stop having to think about this and you'll just be doing it, right? Once that brain of yours starts to go, no, two-legged pullback, failure, strength, pullback, retest, right? Once that gets embedded in your brain, right, you're bulletproof, right? As long as you manage your risk, don't be risking more than 3% of your account. You buy at support, you sell at resistance. You don't try to call reversals. You follow this simple sequence. Right? I'll tell you, man, it is life-changing stuff. Bottom line though is we know where the objective is. I'm getting ahead of myself, right? Where's the objective? The objective is back at 39.25, right? Now look at this. Where are we right now? We are right there. Knock, knock, right? We're there. We're knocking on the door, right? So at this point now, we are too high to buy right now. Do you see how the S&P had some room to go up, right? The Nasdaq doesn't. The bulls have control. Nice strong move higher here, I don't want to be a buyer into this high. Okay, you're more than welcome to, but it's not my bag, baby, right? Not my game. What I want to do is I want to leverage this strong move up, two-legged pullback, and a retest. Buy at support, buy at a trend line support, buy at a swing level. Don't buy at these highs. Yeah, I know. It might keep going higher. But I'll tell you, getting lucky buying high, yeah, you can do it today, maybe tomorrow, but getting lucky every day consistently, okay, I'm assuming that you want to be a long-term successful trader. And if that is the case, you got to stop buying high and selling low. Believe me, it's not easy, right? It's almost like your hand has a mind of its own, and when it jumps up like this, you go, oh, buy this, right? It's that fear of missing out. Okay, I realize that a lot of times price keeps going higher. I realize that, right? But your brain is playing tricks on you. You've got to shift your thinking into probabilities. So your brain will think, I've seen this before, I can make money on this. But your brain needs to go, I've seen this before, I can make money on this. But the probabilities aren't very high. Don't take the trade, right? See that third step, right? I've seen this before, I can make money on this, but, right, record skip, the probabilities aren't very high right now. That's that next level thinking. You've got to go one step further, right? It happens real fast, but again, not just I've seen this, I can make money on this, but one more step, are the probabilities on my side right now, right? Because remember what I said earlier, right? It's all about balancing, right? Yeah, the probabilities are pretty high. We're going to hit that 39.25, but there's no profit to make here. Remember what I said earlier, right? There's always going to be that balance. My little Bob Ross skills here, right? Always that balance between profit. Oh, come on. Profit, my little fat fingers here, and probabilities, right? Right? When there's a high probability, the profit goes down, right? When there's a high amount of profit to make, right, the probabilities go down. You know, for example, right? Right now, it's probably almost close to 100%. It's probably a 99% certainty that we get that high. But look, there's barely any profit to make at this point, right? If I pull back off the high now, right, now look at all that profit. But the probabilities aren't as high anymore, right? As I get off that low, failure, strength, pullback, right? As I start buying here now, okay, now there's that good balance of profit and probability. You see how that works, right? It's a pretty simple idea. But hopefully that kind of gets a light bulb going in your brain there, right? Because I'll tell you right now, it took me way too long to learn that. So how do we get long here? Buying pullbacks, price goes higher, looking for traps, right? So two-legged pullback for the buy going up, or of course two-legged pullback, right, into failure into strength into pullback back to retest the high, right? So there's that broken record again. Okay, what if price keeps going? What if price goes sideways? Yeah, hopefully it does. It'll give me some time tomorrow morning to get into it, right? One try, two try, failure, back up in, right? That failure, that's your bread and butter when it goes sideways at these highs. And it may go sideways. It may also keep going higher here. You can see there's a lot of these little shallow pullbacks right now. It may keep going higher, right? If it does keep going higher like this without giving us good pullback, your job is patience, grasshopper. Wait for that move lower, right? And then, bam, wait for that trap low. Right? Those traps happen all the time, especially after a big run higher, right, when nobody wants to keep buying up here. Buyers take some profit, price pulls back, bears try to reverse the trend, they get trapped, right, and once they realize they're trapped on the wrong side, bam, the price goes back up to retest that high. I would definitely leave a runner up to that measured move, right? I'm not sure how much we'll see. We'll see what it looks like tomorrow. If we're going really strong tomorrow, then absolutely hold that runner to that 7,000 big round number. Right now, the measured move is a little bit too easy to ignore. How would it turn reversal tomorrow? Strength, pullback, strength, right? Remember, I see what happened back here. We got a strong move down earlier today, didn't we? And did that reverse the trend? No, it did not, right? Did they hold that? No, they didn't. Okay, so imagine if they held that pullback, that's what a reversal would look like, right? Strength, pullback, reversal, you got it, hidden channel, boom, right? Grab that move going back lower. Easy stuff there on the Nasdaq. Let's keep going. So Nasdaq and the S&P were just warm-ups here. How about some gold? Gold is bearish with a spike in channel and a short-term trading range this evening. And a little sleepwalking zombie type market today. It was a weird market. You can definitely tell ECB announcement's coming tomorrow. You could definitely tell, as I mentioned last in the newsletter, you could definitely tell there was something coming. Because the gold was like, I mean, it was literally sleepwalking, right? I feel like I wanted to wake it up and bring it back to bed, right? Euro, same thing. You'll see the euro in a moment. So we're bearish, spike and channel, short-term trading range. Those are the three most important components here. The spike and channel pattern tells me to look for selling opportunities with traps and buyer failures above the prior swings. The range tells me to look for selling opportunities using the 2-try rule and buyer failures above the range highs. They all put us basically in the same spot, and that is the battle zone up top. Okay, so a couple things here. First of all, who has control? Do not say the bulls. The bulls do not have control of this market right now. The bears do, right? Bear market. Strong move down, spike and channel, right? Like I said, I mean, this thing looks like a zombie today, kind of grinding lower. And what didn't we get? We never got that jump, failure, strength, pullback. We never got it, did we? So that's the plan for tomorrow. I'll guarantee you right now, as long as Draghi doesn't just wreak havoc with this thing tomorrow morning, which is honestly a big threat. You know, I have no intention on trading during the chaos around the announcement tomorrow morning, right? So we may have to step aside and kind of let Draghi do his whole windbag thing, right, and get this whole thing moving, right? So it may break things up tomorrow. So we may have to kind of put this back together after Draghi knocks it down a flight of stairs tomorrow morning, right? So we'll see what happens. But right now, we have a spike in channel that hasn't pulled back. So I'd like to see us pull back, get that moving average up, failure, you got it, strength, pull back, and back down to retest that low. We've heard that a few times tonight, haven't we? Absolutely. We're going to hear some more tomorrow, too. Okay, what about the range? Great example. We go lower, we pull back, we try to go lower, and we see what we call a market mistake candle, a rejection candle. That's a red candle with a green candle that overcomes the red candle. All right? I do use Japanese candlestick patterns, but not the haramis and dark cloud covers and swinging doji bat patterns that people talk about on the internet. Okay, those don't work. All right? If you're trying to use, I love Steve Nissen. I love this book on Japanese candlestick patterns, or Japanese candlestick reading. It was groundbreaking information. It was written 30 years ago, but unfortunately, you're not going to be able to find very reliable trades off of the patterns discussed in this book. Okay, that's what happens when you see a book published, right? When a book gets published, everybody does it. When everybody's doing it, right, it squeezes out the opportunities. Okay, what you can use though is you can use examples, right, like reversal candlesticks. Right? For example, right here. Right, we see 2 green candles, right? I see basically 1 red candle take back 3 green candles. Do not buy that, right? You know that sequence of candlesticks, right? Whatever it's called, I don't care what the official name is called. We look to interpret the candles as we see them on the chart. And when I see a level of support like that 24.3, and I see a red candle immediately taken back by a green candle, what does that tell me? It tells me we're getting rejection, right? I don't need a specific name for it, right? I don't need a special indicator for this. I just need to look at the darn chart. Okay, it's pretty easy to see, right? So bears are rejected off that low. And we just talked about this, right? Anytime we see a bear market that stops making new lower lows, I realize this is technically a lower low, but it's not really, right? That close is way too strong on the bull side. Anytime we see a market that cannot make new lower lows, we now consider this a range. Draw sideways across that high, and now we know anytime we have a range, 1 try, 2 try, back down in. So you can see no matter what scenario you look for here, whether it's a range environment or whether it's a spike in channel, it pretty much tells us look for those sells up inside the battle zone tomorrow. Okay, now, what if I'm wrong, right? What if I'm wrong? What if we keep going lower here? I could easily be wrong tomorrow. We get Draghi speaking tomorrow morning. If that's the case, we still haven't pulled back. Keep waiting patiently, right? Patience is the name, right? If we keep going lower, right, and we don't pull back, same thing, right? Same exact scenario. Up, failure, strength, pull back, back down. Okay, nothing changes. We just have to be patient to wait for it. Does that make sense? So trading range, sell high. Spike in channel, zombie spike in channel, sell high. Price keeps going lower. Do I sell it lower? No, sell high, right? you can see that over and over again. And again, that will keep you from being that'll keep you from selling low and then having to either use a huge stop, right, or taking your stop loss and then watching it go without you. Okay, one of the easiest lessons you'll learn is that when you just sell at resistance, all of a sudden you're no longer going to suffer from that stop run and then seeing trades go without you, right? I mean, my hand's raised too. I made this mistake all the time, right? Market runs lower, you try to sell it too early, right? Your stop's up here somewhere, and what happens? Market comes up, stops you out, and right when you're getting stopped out, guess what? All professionals are coming in, and now they're selling, right? So that will remove that from your trading day. You won't be stopped out just to see the market go without you if you just avoid the temptation to sell low, right, or buy high. And how do you know? How do you know if you're buying low or selling high? Objective. You have to know where the market's trying to go. Are they trying to go back to retest the low? Are you on the low right now? You are selling low. Okay, pretty simple. Get above the moving average in a bear market, get below the moving average in a bull market, and you'll be on the right track. We'll talk more about that next time. How about some euro, wrapping things up tonight? Boy, it's already 40 minutes into this video. Euro is bullish and trading sideways inside a range. Yes, the same range from yesterday, which tells me the most reliable buying opportunities will come with either seller failures down below the low of the range, right, or a successful breakout pullback going higher. If price tries to break higher, I need to see some strength. And if we can get the moving average above that range, I'm going to look for buying opportunities with a two-legged pullback to the measured move target overhead. So wrapping up tonight on the euro, it wasn't a very easy job there in the euro. The euro didn't do much today. It was a pretty quiet session. Like I said, Draghi on the mic tomorrow, and they're busy batting down the hatches ahead of that news number tomorrow. There's my channel. Pretty easy there. I'm going to buy below that channel. Here is my measured move. Measured move, right? Looking good there. Okay, so that's ultimately the objective here for tomorrow. But they can't quite get away from this range, right? We go up, pull back, up, pull back. That's what created the range yesterday. And boy, wasn't this a great example? I talked about this last night in the newsletter. Notice how the moving average barely poked its head above that range. I told you guys, one of the easiest ways to be able to filter out all of these fake out breakouts, right? First of all, you know this, right? We talked about this last night, and almost every night we talk about this. Breakouts are not reliable, okay? On liquid markets, real markets, okay? Not cryptocurrencies, not penny stocks, not low float, not all the illiquid stuff, right? On the real markets, right? Where there's a buyer for every seller, right? They're highly regulated. Your money is safe in the accounts, right? The brokers are great people. They're not trading against your positions, right? Things like this, okay? In liquid markets like this, you can't take those breakouts, right? Only about 30% of those breakouts are going to be successful. So you see that big breakout going higher, right? Again, if you buy high, you're going to end up getting stopped out right when the buyers come in and want to buy it up. But we talked about this last night, right? You only want to start looking at that breakout when you get that moving average up, right? Nice, strong move up, then two-legged pullback. Okay, the key is as we go higher here, get that moving average up above that range, get the moving average up above the range. And again, that's why I said, look back here. It just barely got back up. Okay, but then that's only step one. Step one is get the moving average above the range. Step two is two-legged pullback, right? You'll notice it went up, two-legged pullback, right? Buyers coming in. All right, guys. So that was sorry about that. That was a good example today of just sidestepping all of that mess on the euro. More than half the battle of being a successful trader is knowing when not to be trading. Right? If I could just figure out when not to be trading, I could keep all the money I made on my profits, right? On my targets. Okay, so that's the goal there. So it's a range, right? It's a bull bias. And so anytime we get a bull bias, we know one try, two try, right? One try, two try, back up in. I still have this just tasty reversal line around that 23,700 area. So I'd love to get that, right? I would love to get that big move down. Moving average comes over. Pull back, you got it. Failure, strength, pull back, right, and back up. I'd love to get that move off the lows here tomorrow. Again, we get Draghi tomorrow morning, so we'll see what this looks like after he's done speaking. If not, strong move up, two-legged pullback. Use that high, which was resistance. Use it as support now, right? Two-legged pullback and the buy up to that measured move. Remember too, if Draghi says something crazy tomorrow and we go straight up, right? Remember where the measured move is. Remember where your objective is. The objective is to get back to that measured move. Don't take the bait. Two-legged pullback, right? Buy low. If it jumps up like that, do not chase after it. You can if you want to, right? But I wouldn't recommend it. Buy that dip, right? Buy that trap low. Buy back at support, right? Don't chase the bait because it'll be a lot easier on your emotions and a lot better for the balance of your trade account. Boy, we have learned a ton of new things here tonight. I hope you guys learned a ton. Don't forget, if you have any questions about any of the terminology, any of the strategy, if you want a free trial, if you want any information we covered tonight in the video, drop those questions in the comments section below the video on YouTube. If you're on the blog, put them in the comments below the blog. I also got live support on the right-hand side of my website, so holler at me there. And don't forget, if you want to learn more about everything that means to be a student here at School of Trade, I'm going to teach you all about the analysis I use, the strategy I use. I'll shoot you an invite to our trade room. Join our free trial right on the homepage of the website at schooldtrade.com. And don't forget our beginner, intermediate, and advanced level membership. I got a great place for everybody. Whether you're brand new and you don't know nothing yet, our beginner class is great for you. If you're an experienced trader and you want to jump into the trade room and get learning and earning, grab the advanced membership, right? That is our most popular by far. And if you have any questions, hit me up on live support, right? Drop me a comment on Facebook. Find me on StockTwits, whatever your favorite flavor of choice. Call the office. The phone number is right in front of you here. And I'll be back tomorrow morning, 8 o'clock Eastern time. Trade room opens up tomorrow. Tomorrow evening is a Thursday. That'll be the final newsletter of tomorrow night, right, or of the week, right? Don't forget, Draghi tomorrow morning. Careful tomorrow afternoon. Rollover for tomorrow as well. All right, you guys the plan. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos.